Dear Board of Directors, my name is John Smith and today I'll present a brief overview of Nigeria Equity Fund, a prospective investment vehicle for Shard Asset Management. This presentation will start by analysing Nigeria's macroeconomic environment before proceeding to portfolio allocation on a sectoral and company level. Next, I will address potential risks and finally finish off by issuing an investment recommendation.
Macroeconomic analysis.
Starting from an economic perspective, Nigeria represents Africa's largest economy with a nominal GDP of $594 billion. Growing at a rapid pace of 7.6% a year, Nigeria highly appeals to growth-seeking investors. Moreover, Nigeria's rising middle class represents a promising market, attracting over $27 billion in foreign investment over the past 4 years. Yet, Nigeria's economy suffers from oil dependency, high unemployment and limiting financing options. Furthermore, Nigeria possesses favourable demographics with a large and young population of 179 million that is rapidly growing at 2.8% a year, representing huge labour and consumer markets. However, Nigeria also faces social challenges such as poverty, poor education, health problems and conflict amongst its ethnic groups. Moreover, Nigeria highly appeals to investors because of its abundant natural resources, including precious metals, gemstones, industrial materials and energy reserves, resulting in lower production costs for firms operating in Nigeria. However, the unsustainable consumption of these resources leads to pollution, soil erosion and loss of biodiversity, which possesses a real threat in the long term. As Nigeria's official language is English and its legal system is common law, it is really easy for Western firms to operate in this country. Minority shareholders and intellectual property rights are also protected, and there are plenty of fiscal incentives available for R&D, export-orientated and labour-intensive firms. Yet legal corruption and bureaucracy ward off companies from migrating to Nigeria. From a technological point of view, there is a serious lack of innovation in Nigeria due to software piracy and poor collaboration between researchers and the private sector. However, foreign companies with advanced technologies can exploit this gap to their advantage, especially in the telecom sector where mobile and internet penetration rates are low. Other drawbacks of investing in Nigeria include political corruption and instability caused by terrorist attacks and the up-and-coming 2015 elections. On the bright side, the Nigerian government has liberalised the economy through various reforms and is proactively investing in sectors of the future to tackle social economic issues like infrastructure, unemployment, education and poverty, thereby providing the investors with confidence in the long-term prospects of this country.
Portfolio allocation.
Our portfolio consists of healthcare, construction, brewery and agricultural sectors as they build upon Nigeria's core strength to deliver strong growth whilst also offering high-risk diversification by having distinctive sources of demand. Driven by Nigeria's persistent health issues and rapidly increasing population, the healthcare sector is highly competitive and growing at 12% per year. The government also assists this sector by promoting health tourism and tackling counterfeit drugs, a key threat for the healthcare market. Fitton Healthcare is our top holding as it stands out amongst competitors due to its industry-leading quality control systems and exclusive right to produce Cestra multivitamins, highly demanded by Nigeria's rising middle class. The construction sector is strongly supported by the government through infrastructure spending and low-cost mortgages as it is key for economic expansion. This, combined with increasing housing demand from Nigeria's rising middle class and self-sufficient cement production, results in a construction market growing 17.5% a year. Yet natural hazards and prospective regulations represent important risks. We invest in Julius Berger as we believe it will outperform competitors by obtaining the majority of future construction contracts due to its prominent reputation and strong relationship with the government. Benefiting from Nigeria's diverse climate and rapidly growing population, the agricultural sector is expanding at 4.2% a year. Contributing towards employment creation and famine reduction, this sector is strongly subsidised by the government. However, key challenges include decreasing soil fertility, droughts and inability to accustom to new technologies. We hold a position in Akomu Oil Palm Company because of its well-diversified business model and successful anticipation of an increase in global demand for palm oil, suggesting a strong and forward-looking management team. The government banned all alcoholic beverage imports in 2003, leading to a brewery sector dominated by a few firms and growing at 3.7% per year. Nigeria's expanding drinking culture, along with cheap inputs and rising population, result in a positive outlook for this sector. Yet, ideologies opposing alcoholic beverages pose a significant threat. Nigerian Breweries is one of our top holdings as it outshines competitors through a dominant market position of 70% and the support of Heineken, providing it with world-famous brands, technology and distribution networks.
Risks and recommendation.
The upcoming 2015 Nigerian elections pose a significant risk for our fund, which sectors rely on the incentives of the current government. A shift in political power may result in the loss of these benefits, thereby adversely impacting on our fund's expected returns. Our portfolio is also sensitive to oil price fluctuations as they are directly linked with the government revenue and strategy. To sum up, Nigeria represents an attractive investment opportunity due to strong economic growth, rich natural resources, as well as a large and rapidly growing population, which combined with a surging middle class results in a promising domestic market in the years to come. I also believe in the future prospects of Nigeria, as its government is actively developing sectors that will benefit the country in the long run, while solving the current social economic issues affecting the country. Combining Nigeria's core strength with high growth stocks in a well-diversified portfolio, I believe Nigeria Equity Fund represents a solid investment for Shard Asset Management.